Now, as all of this happens, time is running out. Yes, mark your calendars. August the 2nd is the deadline. That's just 13 days away. And they've got to pass some kind of debt ceiling legislation in order to meet that deadline. Here to tell us more about market reaction or non-reaction to the situation, Christian Thwaites. He is the president and chief executive of Sentinel Investments, managing about $23 billion. A lot of responsibility. And Douglas Borthwick. He is a managing director and head of FX trading at Faros Trading. Douglas previously ran FX proprietary trading at Merrill Lynch. Gentlemen, good to have you with us. Christian, let me come to you first and set the stage a little bit. I've been saying this all week. It doesn't seem as though the market really cares what's going on in Washington, except that they're not going to get a deal. Now that they seem to be getting some kind of deal, the market kind of shrugs it off. There's no cheering going on.
Well, I think the market did care very much, but it was sort of a feeling of being out of control, and there was nothing really the market could do about it. So they were sort of watching this debate and this kind of inexorable move towards some decision, but it's certainly not been clear. So I think the market just threw its hands up and said, we don't know how to react to this. We don't really know what to do. There will hopefully be some agreement. I think if there wasn't that hope, treasuries would have spun out of control. But once I think something is in place, then I think we'll see more definitive movement in the bond and equity market.
Douglas Borthwick, do you agree?
I agree, yes. I think in the U.S., people are really waiting to see what happens, and there's still time. There's still August 2nd. Really what we're looking at in the currency markets is what's more immediate, and that's the European decision tomorrow and discussions coming out of Europe. And there, who knows what could happen. It looks like there's going to be an agreement that EFSF is going to really change things around. But what does that mean in the long term, too? It's sort of like the U.S. decision when it comes to the debt ceiling or the budget deficit. Really, what do all these numbers mean in the long term, and how long is it going to be over? It's going to be over for over 3 years, over 4 years. Are there tax cuts associated with this? Are the tax raisings? Nobody really knows yet what the numbers are.
All right, can we separate, though, Europe and the United States? I just want to understand what are the options for Europe right now? I mean, are they going to have to come up with some kind of new stabilization facility that would be comprehensive, or are they just going to be able to kind of do a piecemeal reaction?
Well, they're hoping to. We've had lots of piecemeal reactions so far, and it hasn't necessarily been very good for for confidence in the European zone. But regardless of that, the euro has actually stayed rather well bid. So
yeah, 141 against the U.S. dollar, right?
142.
142 this afternoon.
So it's still doing very well, despite whatever's happening in Greece, whatever happening in Portugal. The euro continues to rally over the past year. And so what people are expecting now is to have some sort of resolution or some sort of larger package, which is the EFSF, which essentially would be this bond that will hopefully buy up peripheral debt, but be issued by all of the Eurozone as a whole. And so we'll have a lower interest rate attached to it. But will that work in the long term? I don't think anyone really knows.
Christian, would you buy that?
I'd buy the fact that it's kind of muddling.
No, but would you buy the bond?
No.
All right, in a word.
Even if you kind of take the entire Eurozone together, all you're left with is a core Germany, Netherlands, Austria, Luxembourg, which are relatively strong. And then these peripherals, which we all know about, but actually France and Italy are not far behind. And what we saw this week was that for the first time, a big widening out of spreads between French bonds and German bonds,
right?
About 40 to 70 basis points in less than about half an hour. So there's a lot of nervousness going there, and I don't think I'd buy into that kind of collective nervousness at this point.
Christian, all right, so given the fact that you would not be buying any of those perhaps newly issued bonds in Europe, are you buying any equities in the United States?
Yes, actually, I think this summer doldrums and the kind of intra-week, intraday volatility we've had, with a lot of sort of movement, but not a lot of upward directional movement, has been a very good time to accumulate stocks. And I think we're kind of well set for a early autumn rally. And I think for the next 6 to 8 weeks, there's lots of buying opportunities that we're sort of penciling in and putting in the limit orders to be able to accumulate.
So what are some of the characteristics of the stocks that you're looking for right now? I know that you've been looking at Noble Energy, right? NBL. You've got Sensient Technology, Verisk also you've been looking at. What makes those attractive?
Well, those are interesting. Noble Energy is obviously one of the big E&P plays, but it's an extremely well-managed company. We heard from the chairman of Schlumberger the other day that 30% of upstream projects go 50% over budget. And here's a company which has done very well to sort of manage its cash and its capital. It's got some very interesting acreage off the Equatorial Guinea, off Suriname, Nicaragua, and a very important one in the Eastern Mediterranean. So some very, very good acreage.
Right, off the coast of Israel.
Exactly. Yeah. Very strategically very important, and one which they're getting a lot of help from the Knesset on. So they're just a very strong balance sheet company. It's been in the 90s. as oil sort of, has come back up again. But it's much more than a kind of a leveraged oil play. I think it's sort of very good on the E&P side.
It goes in that category of it's a market of stocks, not a stock market.
Yes, and it's also got great metrics on it. It's like a 20% ROE, relatively under-leveraged, and very good stewards of capital, which we love.
Tell me about the two technology. One has to do with your credit rating.
Well, Sentient was the first one, which is a food coloring manufacturer, which just sounds incredibly boring, but it's one of these products which you use or consume and see every day. You don't know it. So it's and they're in the pharma business as well.
And inkjets.
And inkjets, but that's kind of less interesting than the kind of food colorings, because every time a red pill is red, it's Sentient who's providing that coloring, and it's either natural courage or synthetic coloring. So they're very much tied into their buyers. They've got to their customers. They've got a global footprint. They've got 50% overseas, very good margins. It's one of these companies extremely difficult to dislodge, and so the margins are very good, and the management is very good. It's sort of growing at about. It has never yet had a negative EPS year, negative growth EPS year for about 10 years.
And what about Verisk Analytics?
Verisk we love because it's the kind of mechanics and all the calculations for property and casualty companies. So there used to be this company that was owned by the property casualty companies, almost the same way that Visa was owned by the banks, and then it was spun off about a year ago. So it provides all the critical data towards auto, home loaners, catastrophic insurance, anything to do with the property and casualty side. So it's a proprietary database, and insurance companies are exempt from antitrust regulations. So it's a business which grows at the same underlying rate at P&C. But you don't have the capital problems or the pricing cyclicality. So we like it.
Doug, you've been listening to all these great equity ideas. Any thoughts?
I
was going to say, because you've been looking at things like the euro versus the dollar, the Australian dollar. What kinds of currency trades are you looking for right now?
Well, it's interesting. We talked about EFSF, and would an American investor want to purchase that? And really, EFSF is more about the Asian investor. We continue to.
This is the stability facility.
The stability facility we've been
set up in Europe.
The Asian investor is very interested in purchasing that, really for reserve diversification. We continue to like the euro. We've liked that since June of last year when it was at 120. We've watched it move all the way up to 149.20 and back to 141, 142. We continue to like it. We also like the Australian dollar. The last few days, you've had a negative report regarding rates out of an Australian bank, where essentially they're looking for 100 basis points of rate cuts. Since then, you've had articles from McCran and also from Mitchell that have really said, well, we think they're going to be on hold, or maybe they'll raise rates. We believe certainly that Australia will be on hold or raise rates going forward. We also like Australia against Canada, the Canadian dollar.
Why do you like it against the Canadian dollar?
Well, we see Aussie against Canada really as being a trade of China against the U.S. Australia is about Chinese demand, and Canada is about U.S. demand. So Aussie-Canada gives you a positive carry because of the Australian higher yield, whereas if you're short dollars against China right now, you actually pay away carry. So within the trades, looking at both of them, we love China, so we like Australia against Canada even more.
You were speaking during the break. We were both talking about this idea that the euro is not necessarily something that people value relative to the U.S. dollar, that central banks around the world are trying to diversify their way away from the U.S. dollar.
That's correct, yeah.
Why do they keep doing that?
Why do they?
Is this just general risk?
Why put all your eggs in one basket?
It's just a risk issue.
Well, it's a risk issue, certainly, because you don't want one thing to go down and the other one's not to move. And really what you've been seeing lately is you've seen the largest part, your 65 to 75% of your portfolio going lower. Now, Chancellor Merkel in Germany last spoke, and she said that China has a massive interest in the euro and euro stability. We know they've been buying considerable amounts of euro and other SDR currencies. Now, a lot of people have looked at how the SDR is put together, and that's around 42% in the dollar.
Right, the special drawing rights.
Right,
yeah.
As opposed to 65, 75%. And that's where China is right now. They need to reduce that down to something that's a little more even and in scale with how other central banks look at their portfolios. Gold's another example, I would guess, is that something that's they're very underweight. Our trade for this year so far has been to be long euros and long gold equally.
All right.
And really that trade so far is up 18.2% for the year.
Keep us informed about what goes on. We appreciate it. Thank you very much. Douglas Borthwick and Christian Thwaites, appreciate your insights.